Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at some ticker symbols in play today. We're going to look at some indexes, and some ETFs, and we'll take a look at the current state of the market. First up, let's look at IWM, the Russell 2000. This is a look at the small caps. As you can see here, there's another red candle forming today. We had 6 red candles in a row, and then now today is the 7th. This is signaling more downside risk. This morning, there was a gap up open above EMA4, the pink line. This is the open right here, and currently it's trading at low of day. The bears are in control and they're pushing it lower. So this is signaling more downside risk. What we're looking at is a potential drop down here to these prior support levels. You could see a potential drop all the way down to 133. So this is free falling. It's got more downside risk. We showed you a chart last night that on our last video that pointed out the next support level is going to be this 100-day simple moving average at 132, and in between that you have the low down here in January, where you should find some support down here in this zone. Basically, if the candles keep riding EMA4 resistance lower, it's going to signal more downside risk. For this chart to heat back up, it's going to need to get back above this 50-day simple moving average and then get back above the middle Bollinger Band. So this is a big red flag for the markets, and it's signaling more downside risk for the small caps. So if you're a penny stock trader, just know that the stocks are currently under pressure. IWM needs to be bullish for the small caps to get running. So when the small caps are under pressure, what we look at is the TZA, which is the small cap bear 3 times. So if IWM is down, the TZA should be up 3 times. That's how it's supposed to work. It doesn't always work exactly like that, but as you can see here, TZA is forming the 7th white candle in a row. We pointed out in the last video that there was a close on Wednesday above the 50-day simple moving average. That's this green line. Noticed how it was support or resistance back here. Now there's a close above. It's going for the third day for the third close in a row above the 50-day simple moving average. If that level turns into support, that's going to signal upside potential, putting the 100-day simple moving average on deck. So I just wanted to show you this chart again today to show you how TZA is following through. Keep in mind, the market started the day up, and then they've pulled back and have gone red, and all the bear ETFs that started down are now green, and so that's signaling that the bears are still very strong, and it's signaling more downside risk in the markets. If you look here at this chart, this is the TZA 15-minute chart, and if you notice, there was a gap down open. This is the open all the way down here, and then it ran up towards the middle Bollinger Band, and then it came back down and tested the 50 simple moving average, which is this green line, which it held, and then it got back above the middle Bollinger Band, and now it's trying to get the uptrend going again. What bulls want to see is they want to see a break above this descending resistance line and this red horizontal resistance line. The high close from yesterday is going to be the key level to break. That's just below 1935. If it can get above that level, it's going to signal more upside potential. As long as TZA is bullish on this 15-minute chart with candles forming above the middle Bollinger Band and the 50 simple moving average, there is going to be more upside potential and downside risk for the small caps and the penny stocks. Okay, well, let's take a look at SPY. Let's see how the S&P 500 is doing here. This is ticker symbol SPI, and as you can see here, it's gotten very bearish on Fasto with the break below 50, and so that's a downside risk signal. Now it's headed for the 20 oversold line. As you can see here, there was a gap up open. This is the open today, but then the share price is pulled back and it's now red. It's now trading below yesterday's open. So the day started off promising, but then there's been this big bear attack. We call this a bull trap. The bulls that got in today thinking that it was ready to go, but the bears were stronger, and now they're caught underwater. And so what's going on now is we've got this test here of EMA 13. That's this orange line. Look how it's held for 3 days in a row. If there's a close below that level, then you're talking about the middle Bollinger Band here at 236. That is the huge level at 236.18. If you see a close below that level, that could signal the possible start of a new downtrend, and you could see it drop all the way down to 232, down to the lower Bollinger Band. The lower Bollinger Band and the 50-day simple moving average at 230, those are the two big support levels below the middle Bollinger Band. So if you see a close below that, that's the red flag that there could be a huge drop all the way down here to these to the next key support levels. Of course, there's going to be some support here, you know, where the high closes are, but the bit major support level is going to be way down here, and what it's going to tell you, if SPY fails to bounce off the middle Bollinger Band, that the trend is broken. Notice it's been on this very long uptrend, and that a possible change in trend is coming. So it's a very crucial level right here for the S&P 500 to hold this level. If it fails to and it starts a new downtrend, you know, we've been on SPXS, and this is the S&P 500 bear, S&P 500 bear 3 times. So this is supposed to do the inverse of the bear, if inverse of the S&P 500. So if the S&P 500 is up, this will be down. If the S&P 500 is down, this will be up. And so that's how it's supposed to work out. And what's going on here is you have a previous very long downtrend, and now support has been found, and it's been trying to turn EMAs 4 and 8 into support. Notice how they're pinched. It's the pink and green lines. EMA 4 did bullish cross. Notice the pink line is above the lime line right now, and so that is signaling an early reversal signal. If the pink line stays above the lime line and the candles stay above both levels, that's going to signal a new uptrend is starting. The key level to break now is going to be the middle Bollinger Band, currently at 915, and so you want to see a close above that level. As if SPXS can close above that level, a new uptrend could begin, and that could signal major downside risk for the S&P 500, and you could see a run all the way up here to the 50-day simple moving average. So this chart, once again, this is the open. There was a gap down open today, so it was looking very bearish, but notice how the bulls have been able to charge all the way back, and now it's trading above yesterday's close. So this is a huge move. Notice how low of day was the opening trade. There's no lower wick on today's candle, and how high of day is the last trade. This shows that the bulls are super strong. Once again, this is reflecting the bull trap. The S&P bulls got trapped on the wrong side of the trade, and now the bears, which are bullish on this chart, the S&P 500 bears are in control, and so and that makes them bullish on the SPXS chart, if that makes sense to you. Notice the crossover here on MACD, the parabolic SAR bullish flip. You know, you've got Fasto above 50, you got RSI above 30. If RSI gets above 50, that's going to be a huge red flag for the S&P 500. Okay, let's take a look at GLD. Okay, this is the Spider gold shares, and as everybody knows, gold has been under pressure. It's had this huge drop. All right, it broke the middle Bollinger Band here, and then it came all the way down, and it broke the 50-day simple moving average this week. Okay, that was the key level to hold. Notice it's so bearish that it's forming candles below the lower Bollinger Band. That's the solid purple line. So this is extreme bearishness. The Fasto is at extreme oversold levels down here at 985. There was a bullish crossover today. It's trying to bounce down here. It's trying to find support. It's getting support off this off these previous closes, but it's not a super huge support zone. The red flag here for GLD. Look over here at these moving averages. Check it out. Currently the lowest moving average support level is the EMA 4 at 1509, and that's currently above the share price. That's the next resistance level to break. So there's no more moving average support. Currently, GLD is trading below all the moving averages that we use on our charts. And so what is that telling you? That's telling you extreme bearishness. This is a very, very, very strong downtrend. Any kind of bounce right now is just a dead cat bounce short cover rally. Look at all those red candles in a row. I mean, at one point, you know, the bears have to make a little money, right? When they cover, there's a little bit of a bounce. It's a technical short cover rally. But until candles get above EMA 4, this is going to be more downside risk. I mean, you could see a huge drop from here. The downtrend could continue showing you it's going to be a major red flag if the 50-day simple moving average, and then also if you look at the gold line, that's the 100-day simple moving average, they're both together here. If they turn into resistance, that's going to be a major red flag. Notice the 50-day simple moving average is getting ready to cross the 100-day simple moving average to the upside. That's showing you that this chart was building strength. You know, it had been building strength. So it's really important that the candles stay above both those levels. If they go below both those levels, that's going to be a huge red flag that GLD is in a major downtrend, and it's going to signal major downside risk. So, you know, I'm just following the charts and doing the technical analysis, but it's pretty common knowledge that gold is under pressure when the Fed raises interest rates, which is supposed to happen later this month. Okay, and they just came out today and they said that they're talking about a Fed interest rate in June. So we're talking about March and June, because the numbers coming out today on the economy are very strong. There was a super strong jobs report today. You know, keep an eye on the energy and material sectors. They should do well with this big jobs claim, with the big jobs numbers. And yeah, so let's just keep looking at the charts here. Let's take a look at Yang, Y-A-N-G. This is the China bear. This is 3 times. So this is you know, taking a bearish position on the Chinese stocks. And if you look here, this is turning, you know, started this new uptrend. This close right here at the start of March was signaling that a new uptrend was beginning. Notice how the middle Bollinger Band here is the dotted purple line. Check out how it was resistance, you know, candles forming below signal downside risk, candles forming above signal upside potential. Notice how the candles are riding above the pink line. This is a very strong chart. The next target's going to be the 50-day simple moving average here at 1383. If we can get a break above that, then we're looking at the 100-day simple moving average. As long as candles stay above this middle Bollinger Band and they keep riding EMA's 4 and 8 support, this is a very strong uptrend. And so this is signaling more upside potential for the China bears. So it's not looking good for China right now on this chart. If middle Bollinger Band support breaks, then that'll be the red flag signaling downside risk, and then you'll want to switch over to the other ETF. Okay, let's look at the Russian bear. This is RUSS. This is the 3 times Russian bear. Okay, this has been on a very strong uptrend as well. There were early clues back here that the chart was heating up in January. It consolidated sideways, and then when you got the break back above in February, this was your clue that the chart was ready to go. Okay, and then when the break above the middle Bollinger Band was the signal that, like, okay, this chart is heating up, it's getting ready to go, and also it was accompanied by the big volume spike. These are all clues that the chart's getting ready to go. And then on this candle right here, this black candle, the close above the 50-day simple moving average, the green line, that was your confirmation. That was confirming that this move above the middle Bollinger Band on a volume spike was real, and that there was actually more upside potential. As long as this green line held, your signal was to continue going long if you were swing trading. This is the swing trade setup. Take a starter here, take the rest of the position here, ride as long as the candles are riding EMA 4 support higher. Notice all the close. If you want, you know, you can exit when EMA 4 breaks, or you can ride as long as EMA 8 is holding. You know, it kept going. Now it's above the 100-day simple moving average. If the 100-day simple moving average holds, then you're talking about a potential push all the way up to the 200-day simple moving average. So, you know, similar to between these two moving averages, you could see another move in between these two levels if the 100-day simple moving average holds. If it fails to hold and you see a pullback, then you're going to see these EMAs tested. If the EMA 8 breaks, that's when you might see a drop down to the middle Bollinger Band. As long as this middle Bollinger Band is holding, this uptrend is still strong. Just when the EMAs break, you could see a correction, and most people don't like to hold on the pullback. But for swing traders, this is a really nice looking swing trade chart. You know, you'd want to enter down here on the break above resistance and then just keep riding as long as the chart is strong. So, you know, and there was this huge volume spike yesterday, and it's holding up well. So this is, you know, which could have been some profit taking, but it's actually recovered well. So the Russian bear is strong as well. Okay, now let's look at oil. Check out DRIP. This is the 3 times bear, S&P oil, gas and production, exploration and production bear 3 times. And so this here is an ETF that once again has started and has been in a very nice uptrend. Notice how the candles have been riding above the middle Bollinger Band. You know, they broke the 50-day simple moving average, the green line, held it, kept heading higher. Notice this channel, very strong uptrending channel. Recently, what's happened is the 100-day simple moving average, this gold line, has turned into support, and now it's pushing higher. Notice there's been a break above the previous ascending resistance line. If that red line turns into support, now you're looking at a new channel, and we're talking about a potential push up here to the 200-day simple moving average. That is the next target, 2219. We're thinking that if this continues and the uptrend stays strong, there should be a push up to that level. If you see a break back below the trend line, then you're talking about a potential pullback down to the 100-day simple moving average. That is getting lined up now with the middle Bollinger Band. For this uptrend to continue, it needs to hold this ascending support line in the middle Bollinger Band. As long as that continues holding, then the uptrend will be strong. So this is just telling you that the energy sector stocks have been under pressure, and this is showing you that the bear has been strong. And so for a lot of the small cap plays that we trade, that we discuss in our chat and online on websites like StockTwits, it's gonna, this chart needs to turn bearish and GUSH, which is the bullish 3 times gas and exploration production exploration ETF, that needs to heat up. So just going to show you here by looking at these different ETFs and the indexes that the trend is your friend. And in order for, there's going to be select stocks that are going to do well, but for the overall, for let's say the small caps, for them to do well, you have to have a bullish IWM chart. For the S&P 500 stocks to do well, the chart needs to be strong. So if you see the charts are under pressure and they're not doing well, just take a look at the bear ETFs. It's a nice way to get some upward momentum when stocks are down. Okay, I hope this video helps, and if you'd like to learn more information about the stock market, about technical analysis, about how to use this information to trade, please come and join our chat. All right, thank you very much. We're at mychartcoach.com, and you can watch more videos at our YouTube channel at mychartcoach.com. Thank you.